Rohitji, thank you very much for joining with us. And we would like to understand from you, Rohitji, because you are running a very large organization actually. Can you share with us your perspective on the emerging trends and latest development in the fintech industry? Because you, as you told, you have a US company also globally. You are dealing with the fintech space actually. And then what would be the impact on the recent RBI guidelines? Because RBI come out with some regulation where the FLDG cannot be given by the fintech companies to NBFCs or banks when they are doing tie-ups. So what will be the impact on the industry of that actually? And over to you, and thank you very much, sir.
Yeah, so Ashish, thanks for inviting me, and I think there's been very good points the other panelists have made till now. So yeah, so as a company, we have been around a long time. We started, actually, me and my brother, we started the company in New York in 2007, 2008 time period when there was nothing known as fintech, actually. And over the years, we have two sides of the business. I'm going to come to the RBI stuff after that pretty quickly. So one is our lending business, where we are focused on the MSME and the small business space. And then we have a platform business, which is the 𝐿2𝐿 business, where we offer our platform to lenders. Plus also we create ecosystems around it. In India, I think it's very interesting because we have an outside-inside perspective in a way. So we have over 600, 700 people in the company. All our technology development for our global platforms happen from India. A lot of our operations run from India for our US business also, and we are also present in Australia and market also. I think in India, one thing we are finding very interesting is two things. One, obviously, this new RBI notification which has come, because RBI has been very worried about the whole FLDG model over the last 2-3 years. It's almost like shadow banking what it used to be in the US markets, where it was almost impossible to figure out that who is actually the owner of the risk. So I think what RBI is trying to do by restricting the whole FLDG and even the BNPL model for fintechs who are not NBFCs is that they are trying to pinpoint that the risk has to lie with an institution that is either quasi or fully regulated. And the other thing is that you cannot get away from doing fast loans just because of the fact that you have an FLDG or you're linked to the FLDG. And then you don't really worry about how the portfolio is going to perform, how things are going to happen over a period of time. So I think in that sense it's a good regulation. It's pretty similar to what Raghuram Rajan launched in 2014, 2015 in India with trying to clean up the banks. So I think that's good. I think one challenge that we find in India, and I think not many people talk about it, is that the regulatory policy in India is very much in flux. So RBI loves coming with new regulations every 6 months, which sometimes it makes sense of what they were doing in the last 6 months, but then sometimes it just diametrically opposite. Coming from again outside-inside perspective, I think one thing that a lot of international investors are also looking for, and international companies, is more, I would say, transparency and more consistency in regulation. I think a lot of fintech is one of those industries which has a lot of tech component. It's a startup. A lot of venture capital money has come in. A lot of other things are happening. But it's an industry which is going to be still more regulated than any of the other tech-enabled industries in the country. Whether it's e-commerce or ed-tech and other industries. So obviously the regulators have to play a very big role. So what regulators in economies like in Singapore and now Dubai are trying to do is very progressive. I would say in India, RBI is well-meaning, but a lot of time when they do these things, it's a pretty much knee-jerk reaction how they do it. And the problem with that is that it's very difficult to build a business around it, because like I said, the recent stuff on fintechs who are doing the BNPL. Now RBI knew about it for the last 3-4 years that these companies are raising a lot of money. While I find it very interesting the amount of celebration that happens in this country, starting from the Prime Minister of the country to everybody else on the number of unicorns we have. I think unicorns for me, honestly, and we have done this business for a long time. We have seen a lot of companies go up and down. In my view, that's the first step. That's like a paper tiger. Now, whether a paper tiger can become a real tiger or not, will depend on how do you execute, how do you monetize, how do you make it into a unit economics profitable business, how do you add value, and are you solving any pain points, and are you solving any real pain points? I think the last 2-3 years, what I find is that everybody wants to be a unicorn, which is great. I think it's very aspirational, but are we solving any real pain points? Are we adding value? Are we setting up companies which are sustainable living cycles? And we'll see it now, as the cycle turns. But I think the key is good regulation, even the other regulation that RBI is coming up for NBFCs to actually recognize their NPAs over a 90-day period is a very good step in that direction. Appointing chief risk officers, for NBFC with a certain asset size or above a certain asset size is also good. I think the key is having the right regulatory mechanism and going forward with that. I think the zigzag becomes very tough for a lot of people to tackle, and that will prevent Indian fintechs to become big companies. Indian IT companies have become so big, and IT services companies and all that, and they're globally extremely competitive, well run. It's because government was not there. Government didn't regulate them. Government didn't try to tell them, who they can hire, not hire, minimum wages and all that kind of stuff. And that's why they've become world-class company. I think a lot of fintechs also need that space and to operate and some freedom and also more guidance, because that's going to help them. Because my view there is that if that doesn't happen, there's a lot of euphoria in fintech. There will be a lot of setbacks, and that will discourage big international investors to keep putting more money in fintechs in India.